This is Tom Aspray with the Viper Report. It's the market wrap video for the week ending January 6th, being recorded on the 8th. It was quite an interesting week for just 4 days, and let's look at some charts. From my point of view, the most significant development was the improvement in the broadly based NYSE advanced decline numbers. Even though the markets were down on Tuesday, the NYSE advanced decline numbers were positive. And also on Wednesday, after Wednesday's closed, a majority of the daily AD lines turned positive, which was a very good sign and was enough to, warrant some new long positions. This weekly chart shows, that we've, essentially broken the weekly downtrend, and now we're going to retest that breakout level. Nice little pattern in here. The doji a week ago closed above that, not really a doji buy signal, but still a sign of positive momentum. The NYSE All AD line has broken its short-term downtrend. Of course, now we need to move above this peak and then above the major downtrend to suggest an important low is in place. Of course, we switch to the daily. You see a little different perspective here. You can see that this is a pretty, this downtrend goes from the August and the early December high, so a fairly significant level of resistance, and the moving average is starting to turn up. Usually the best moves, like the one we saw in October, which turned out to be pretty profitable trading, are when the moving average is in a solid uptrend. 30-35% slope, gave us a lot of opportunities in here, and so this looks like it has turned. If we look at the Spider Trust, you can see it's still below the 20-week, so it's got some room to improve that. AD line, is not that far. Another week like this last week, it could break this downtrend, line B. If you look back at the weekly numbers, for the NYSE, we said 2,607 advances, just 717 declines. Advancing volume was 10 billion and just 5.3, so that's pretty strong. NASDAQ, not quite as strong, but still, almost, 2.5 to 1 up. Both instances, there were more new highs than new lows. That was a good sign. You can see the high-low chart for the NYSE. We had a typical bottoming setup in October, that there were fewer stocks making new lows as the market bottomed here in the middle of October. Had a pretty nice rally here. Didn't really get above the long-term resistance, but it's held firm throughout that. So that's what you'd like to see. And more importantly, you haven't seen really any pickup, even on the setback we had, from the early December highs. Very few relatively new lows were being made. So, we'll look at this. If you look at a little longer term perspective, so you go year and a half out, you can see that at the highs in late 21 and 22, a significant negative divergence here was a sign that the common stock had stopped going up, even though of course the S&P made its high right around in here. So that's an encouraging sign. Get above the 170 or something new highs, that would be great. What you'd want to worry about is if we see a move above, say, 265 in the new low category. There was some pretty good buying on Friday. You can see over 90% of the S&P stocks were higher, 86% in the Qs. But we're just getting back to the new pivot in the S&P here, which is at 3901. So if we get above that, then it's 39 or 4038 and 4238. Okay, 4238 will take us back to that August high, which a lot of people are waiting, think that the rally up there will fail. It could, of course. We'll take it step by step. The 20-day moving average here is just starting to flatten out, so it needs to start rising, as it did back here, in October. If you look at the short-term advanced minus decline action on the NASDAQ 100, you can see we're getting back up in here to, plus 22. So you see it, plus 48 or something. That's where it often tops out. So that suggests, we could see a pullback this coming week. A little more encouraging here from the stocks above the 50-day on the NASDAQ 100. You can see that even though we're pretty much, retested the lows, there are quite a few more stocks, above their 50-day than there were back in October. You look at this data based on the S&P, you can see that, the in purple here is the number of 50-day. So that looks like it's bottoming. This is the 20-day EMA, so it's it's moving strong. Another day or two in the upside, it'll be back to this plus 90 range. And down below this, we have the 200-day, which looks like it's also bottomed just below 50. So, you'd like to see a strong move. You'd like to see a move above, this peak, roughly above 70 level. That would indicate internal strength. I skipped this one. I meant to look at the NASDAQ composite to you. It gave us great signals at the highs. You can see that it also is acting stronger than prices. There was a nice surge of 130 new highs on Friday. Only 100 new lows, but the slope and the pattern here is what's important, and that clearly looks, not raging bullish, but improving definitely, and suggests a shift is, could really be there. Of course, the more positive outlook for the stock market is supported by the action in the bond market and in the dollar, for that matter. I mentioned last week that we were likely to see a pullback, and then at the start of the week, which was right around in here, I said, well, hey, if it's is this just a rebound in a downtrend, or was this the start of a new trend higher in yields? The weekly is negative, the monthly is positive, so it's kind of a mixed bag, as I wrote in Forbes. But the amount of this reversal here, is suggesting more that this was just a rebound in a downtrend. You can see the MACDs will probably would take a massive move to the upside in terms of higher yields to turn around. So it'll likely flip back to negative early in the week. And if we break much below 3.40 on a yield basis, we're probably going to head back down in, to the, longer term support, which is in the 3.2, 3.12 to 3.2 area, back up in here. You can see the chart of the 2-year yield. It had a pretty massive reversal too on Friday, and pretty weak. It really never broke down like the 10-year yields, and now it's looking like maybe really short-term rates are going to, start to catch up here. So that'll be something to watch. As for what markets to trade, you can see the ratio here, growth versus value. When it's dropping, it favors value. When it's rising, like it was in off the in the COVID low, it's bullish for growth. So it's still positive for value over growth, and I think it's likely a longer term trend change. That doesn't mean we're not going to have rebounds like we had this one, in October. Because you look at the gap here between the 20 period EMA, you have these rebounds, so we could be setting up for one of those rebounds in the not too distant future. I didn't like the action in crude oil last week. We got stopped out of a long position in XOPN and VLO, and they snapped back on Friday, but you can see this is not a very positive pattern. Seasonally, crude does start to bottom in the January, February time period, or actually late December, but it doesn't seem like that's happening right in here. You can see like we closed below the doji low there, and if we look at the daily chart, it doesn't look very encouraging either. The HPI has dropped back below zero, so money flow based on the open interest and the price action is negative. OBV, still in a downtrend here, so to get the OBV to turn around, you'd really like to see it get above that downtrend and back above its moving average. It tried because we bounced a little bit here, but nothing to I'm out of the oils right now, and I'll just be watching it. The positive flip in the AD lines were enough evidence for me to take a long position ahead of the jobs report. Not something I do all the time, but I saw this action in the IWD. That's the Russell 1000 value. We got in at a pretty good level, so we just dropped back on Thursday. you know, right back to the 20-day moving average, closed strong on Friday, and you know, looks like we have a good shot of breaking this downtrend here, and certainly you can see the relative performance here, you know, has been showing that it's leading the S&P here. OBV still a bit disappointing, so we'll keep an eye on that. You know, if we get back up to that 160 level and more volume doesn't come in, we'll probably scale back the position. We also recommended new longs in semiconductor SMH. Interesting pattern here with this higher close on Wednesday. Jerry's you know, deviation flipped to positive there, and you can see that the I looked at the relative performance supported that view. OBV didn't, but oftentimes, and those of you who are often in SMH, is almost like trading the futures. I think it had 7% one-day moves in the last year, and so, you know, it's maybe a quick trade, you know, but it looks like it could get up to that 218 to 225 level. We just closed back, you know, above, you know, the new pivots at 211.36, so we closed slightly above it at 211.67. So let's put in some of the, hang on. So the R1 is at 226.17, R2 at 249. Of course, you got up to 249. We got you know, out of longs way back in here around that 249.50 area. That would be a pretty amazing moves. I hope you're all using the pivot points as well as the Stark bands. You can see how powerful they can be, and you know, it's something that when I teach it, I really, you know, kind of open a lot of people's eyes with you know, how they can keep you, you know, in and out of a position. You know, for example, you know, some were looking for the semiconductors. There was lots of news on CNBC, and you know, NVIDIA was going to the roof here, and you know, look at what the technical studies. We were above the Stark band, high risk area to buy. OBV was negative, and you know, the relative performance was starting to break down. Not a time to buy. I've been very successful over the years in getting people to be their own money managers, getting them away from some of the big firms, and a lot of them have really prospered under that tutelage. So if you're interested in learning more about technical analysis, there's a link to the special offer. $199, not much in this day's market, and it really hasn't gone up. It's a 90-minute one-on-one session with me, though they always run over, and it might give you an opportunity to get on board with the stock market in 2023. I feel pretty confident it's going to be a different type of market there, and I think, you know, there's lots of opportunities. I've been privileged to know a bunch of the best-known market technicians like John Murphy, Martin Pring, Tim Slater, and Greg Morris, and they've been nice enough to say some very nice things about me. And I probably had to buy a round afterwards, but that's a whole nother story. So hope you'll consider this. There's a link underneath the video. And if you'd like to get specific advice on stocks, the Viper Hot Stock, there's a link on the main page of the Viper Report or the Viper ETF Report. We look at individual, I track about 120 different ETFs. So I hope you're enjoying this series of videos. I've been sending them out for a number of weeks to all my clients, and you can judge for yourself. They're probably in your email. You can see what I was saying a couple weeks ago, and you can see what happens this week, and you'll get an idea whether I'm on the right track or not. So once again, thank you for tuning in.